Hi, everyone. Thank you for joining us today. I wanted to start by telling you all a short story. A few weeks ago, I opened a new trading account because I wanted to buy shares in a company that was about to IPO. Now, instead of letting me deposit my funds and trade instantly, the app held my funds for 5 days. Now, as a result, by the time I was able to actually buy the shares, they had jumped by 20% in that time. With a show of hands, who in this room has experienced something like that? We all want to solve this problem and create frictionless experiences for our customers, but that's much easier said than done. As our industry and your business continue to grow, we're facing a rise in fraud as a result of increasingly sophisticated bad actors. Let me give this example. Consider that in 2021 alone, Americans lost more than $5.8 billion to fraud. $5.8 billion. That represents a 70% year-over-year increase compared to 2020. This is why we are so excited to be here today to talk to you about how you can reduce ACH risk and accelerate funds with Plaid. I'm Catherine, and I lead go-to-market for our transaction risk team here at Plaid, and I'm joined by Rahul, our product lead for transaction risk. Now, as you heard from John Denis earlier, fighting fraud and mitigating risk has multiple different facets. The first step is getting the right users in and verifying that they own the bank account that they've linked. Now, we're going to talk about how we're also helping to address ACH transaction risk and how you can move funds more quickly while still mitigating the risk of return. ACH is a very valuable rail because it's cost-effective and it's scalable. However, it can be slow and uncertain because after a transaction is processed, it can still be returned. So let's break down the different kinds of ACH returns and the biggest drivers. First, the one you're probably all familiar with is insufficient funds. This is the #1 cause of returns. Debiting an account without sufficient funds results in both a poor customer experience and can be costly to both them and you. The next biggest driver is administrative returns for things like account closures, invalid account numbers, or inability to locate the account. And finally, consumers can submit unauthorized returns if they believe that a transaction has happened fraudulently or by mistake. So if you're a trading app, like the one I tried using the other week, you need to take all of these things into consideration when letting your users deposit funds into their accounts. Mitigating risk often results in long holds on funds, leading to the poor experience that I and that many of you have had. Now, minimizing returns can be a bit of a balancing act. You ultimately want to create a great experience for your users while also removing as much friction as possible. At the same time, you don't want to skip any steps that's going to introduce new risk into your flow. So that typically means that you have to make a choice between two things. #1, playing it safe and placing a hold on funds for a few days. And #2, rolling the dice on transaction risk to get users through the funnel quickly and suffer losses. Both of these scenarios can create bad experience for your users. Either they all have to wait too long before they have access to the funds, or they get hit with an overdraft fee because they didn't actually have funds in their account at that time. We know that this one-size-fits-all approach doesn't work for all transactions. For example, the trading app that I'm using may want to let me trade instantly with my funds, but may decide to place a hold on funds for Rahul. However, I'm always hearing from businesses that creating dynamic payment flows is much more difficult than anticipated and requires a wide variety of insights. Additionally, managing returns, retries, and collections is an operational nightmare. You need a process to revoke a product, contact the user, and attempt to reclaim lost funds. And on top of all of that, you have to have a customer support team to manage the process. The way to mitigate ACH returns is to prevent them from happening in the first place. That's what's going to enable you to create frictionless experiences for your customers while minimizing your operational cost. Apps that get their users to take their first action quickly retain users 50% better, yielding a much higher lifetime value per acquired user. So how do you minimize ACH risk? The right solution gives you the insight that you need to make an informed risk decision before submitting the transaction for processing. Most services out there are largely focused on preventing insufficient funds, but that doesn't include all of the other types of returns that I mentioned earlier. That's where we come in. We introduced a new ACH payment risk solution last year called Signal. Signal uses machine learning to provide insight into the level of risk that an ACH transaction carries. It's powered by the Plaid network and includes insights based on over 1,000 risk factors to indicate the likelihood of a return. These factors include insights based on bank account usage and connection activity that only Plaid's large and diverse network can provide. Signal also looks at past ACH events and changes to identity information. And here's the thing, it's all powered by consumer permission data. Now, when you call the Signal API, it provides 2 risk scores in real time. Number 1, the bank-initiated score predicts the likelihood of returns initiated by the financial institution, like insufficient funds, like RO1s, or administrative returns. Those can typically have a return time frame of about 2 banking days. These returns are the most prevalent. And number 2, the customer-initiated score predicts the likelihood of return initiated by the consumer, such as unauthorized returns like R10s, which can have a return time frame of up to 60 days. Now, these returns are often caused by hard-to-predict fraudulent activities and can lead to significantly higher financial costs. In addition to each score, we also return a risk tier designed to help you quantify the likelihood of return. And finally, Signal also provides over 60 predictive risk attributes spread across 4 categories. So how does this help you? These insights will provide even greater visibility into the factors contributing to a given score so that you can make an informed risk decision. This is one of the biggest differences between Signal and some of the other products out there that only provide a return probability score. Having these rich insights behind the score can help you tailor your risk model to a specific user type and use case and experiment with different approaches over time. This level of granularity gives you the flexibility to customize your approach to risk. For example, you could decide to break transactions into multiple risk tiers based on the data you get. So let's say that you use Signal data to categorize transactions as low, medium, and high risk. Now, a low-risk transaction is unlikely to return. As a result, you can accelerate the release of funds to the users, even allowing for instant access, and let them take their first action right away. This would have enabled the experience I wanted to have. Now, a medium-risk transaction warrants a bit more caution. So for them, you could decide to place a short hold on funds for, say, 3 to 5 days before releasing them to the user. And for a high-risk transaction, that's going to require more due diligence. You may decide to step that transaction up to a manual verification flow to collect more information before approving or declining the transaction. Creating a plan for each type of transaction means that you can offer a seamless experience to your users and put controls in place for riskier transactions. Signal enables you to make smarter risk decisions. Now, it can be used as a standalone product or combined with other data sources like your internal app data as part of a larger risk model. So that's a little bit about how Signal works. Why don't I tell you about how it's been helping our customers? We've seen Signal be very effective with some of our early customers. For example, they've been able to reduce insufficient funds fees by as much as 57% while introducing hold times to less than 2% of their transactions. We've also helped detect over 55% of unauthorized returns. Imagine cutting your unauthorized returns in half. Let me give you an example of how one of our early customers, Webull, uses Signal to create a better customer experience. Webull is a trading platform for investing in stocks, options, and ETFs commission-free. Customers can also buy and sell crypto in the app. They offer multiple account types, smart trading tools, and the ability to trade pre-market and after hours. Their platform is great for investors who need robust tools or a convenient trading experience on the go. Now, before using Signal, Webull would place a hold on ACH deposits to protect against returns. We all know that in today's market, a few days can be missing out on a huge opportunity like I did. We've become accustomed to everything being so instant, so why can't ACH be the same way? It can. Today, Webull uses Signal to provide a great customer experience to its users. They use Signal to place transactions into 3 different categories: green, yellow, and red. For green transactions, Webull gives the user immediate access to the funds. For yellow transactions, they give the user immediate access to a portion of the funds and place a short hold on the rest. And for red transactions, they don't provide immediate access and wait for the funds to settle. For example, if a new user initiates a deposit of $1,000 and Signal returns a score that would put them into the green category, Webull will provide that user with immediate access to the full $1,000. Having greater visibility into the likelihood of returns allows Webull to provide instant access to the funds with a low probability of return. Plaid is thrilled to be helping Webull and its customers trade quickly and easily. Now, I'd like to hand it off to Rahul to talk about what's new with Signal and walk you through a short demo.
Thanks, Catherine. Hi, everyone. As Catherine explained, Signal provides valuable data to inform your risk models. Signal can provide insights to millions of consumer permission accounts all across the Plaid network. And to date, Signal has been used for tens of billions of customer transactions since we launched it late last year. When I talk to customers, they tell me about a couple of key product needs. Number one, how fast can they get to a decision using Signal? And number two, that the product is getting better at assessing risk for their specific use cases. To address number one, we've reduced the latency for Signal so you can get faster access to decisions so that you can enable magical customer experiences. So as we continue to scale across the Plaid network, our models will continue to get better at transaction risk. As customers use Plaid and Signal, our models continue to improve and assess the riskiness of transactions and help prevent fraud. To that end, we've also launched a new feedback endpoint that allows businesses to submit your transactions and return codes back to Plaid so we can improve the models for you. Now let's take a deeper look at the Signal API, so I'm going to walk you through a demo. Here's an example of an app that uses Signal to evaluate the ACH risk of a transaction when a customer wants to fund their trading wallet. The app is called Ascend, but it could apply to any one of your apps out there. Now let's imagine for a moment that Catherine here wants to deposit $200 to start trading on Ascend. Before initiating a transaction, Ascend wants to call our evaluate endpoint. They use the access token that was created when Catherine signed up for Ascend and verified her account using Plaid Link. Now let's take a data that is returned by Signal back to Ascend. First, you can see that there's scores for both bank-initiated and customer-initiated risk, with scores out of 100, with higher numbers indicating more risk. As you can see here, Catherine's transaction is relatively low risk. She has a bank-initiated score of 7 and a customer-initiated score of 10. And what does that tell us? It tells us that Ascend can confidently allow Catherine to start trading immediately with the $200 that she's transferring into the app. That is fantastic for Ascend and fantastic for Catherine here. Now let's imagine for a moment that I, Rahul, want to transfer $500 into my Ascend account. Now Ascend again calls the Signal API, and we get this. The bank-initiated score is 14, and the customer-initiated score is 55. This customer-initiated score is a bit higher than what we saw with Catherine. Whoa, whoa, whoa. Did you come up with these scores? If you take a closer look at the attributes now, you'll see that the number of Plaid connections that were made in the last 7 days is much higher than what we saw with Catherine, and also pretty high compared to the number that was seen for the last 30 days. Compared to this might suggest that there might be some fraud happening with this account. Signal is able to analyze trends like this, as well as many, many other variables, including the number of unauthorized transactions, as well as the velocity of funding going in and out of our account, to help evaluate the risk of return. Now, given that my transaction poses a bit more risk, a send can process the transaction and put a 3 to 4 day hold as an added layer of protection to let them clear before they let me trade. Once a send processes the transaction, a send can now use the report endpoint to let Signal know that the transaction was initiated, but also the number of days that the funds were put on hold. This creates a record of transaction for us. Now, in the future, if the transaction was now returned, a send will now report the return code as well as to the same return endpoint that we used previously. Reporting enables Signal to improve the model and score transactions for a send in the future. So that was Signal for you in a nutshell. Signal is a great tool, again, if you want to bake into your existing risk models and help reduce your ACH return risk for bank and customer-initiated returns. But what if you don't have a risk model today? Or your business requires a lot more certainty that the transaction won't be returned, so you can instantly fulfill that product or a service. That's where Guarantee comes in. As Jean Denis mentioned this morning, we're excited to introduce Guarantee to you, a new product that protects against ACH transactions. With Guarantee, Plaid provides a transaction decision and underwrites the approved transactions. We process the transactions, and from your perspective, the funds settle and will never get returned. We take on all the risk. Isn't that fantastic? We take on all the risk. Guarantee uses Signal and other data to provide a real-time transaction decision. Once the transaction is guaranteed, you can release any pending product or service right away, without the risk of that transaction returning. This creates a ton of new opportunities for your business, which is fantastic. The other benefit of Guarantee is that you don't have to manage your returns. Just imagine staffing teams to manage things like user support, dealing with having to revoke access. No, it's complex, it's costly, just painful. Nobody wants to deal with that. There's no need to handle returns with Guarantee at all, meaning your business can stay focused on building great experiences for your customers. We're excited that Guarantee is now in closed beta. Please reach out if you're interested in participating. Thank you for joining us today to hear about how Plaid can help you minimize your ACH transaction risk and accelerate funds for your customers. We're excited to see all the ways that you can use both Signal and Guarantee to build fantastic fintech experiences on top of ACH. At Plaid, we build for developers. So you can be sure that it'll be simple and straightforward to integrate our APIs into your product, but also provide unparalleled data quality from across bank accounts all across the country. If you're interested in learning more, I encourage you to reach out to your account manager or just contact us via our website. Thank you. Please stick around if you have any questions.